Finance ministers and central bank governors from the group of 20 nations who met in India last week have called for debt relief for vulnerable countries. U.S. Treasury Secretary Janet Yellen has urged for meaningful solutions to the mounting debt woes of countries such as Sri Lanka. The country of 22 million people have been suffering its worst economic crisis in decades. But an impending IMF bailout could offer some relief. Rebecca Bundhun reports.
Sri Lanka is an economy in trouble. For the first time in the island nation's history, it defaulted on its sovereign debt last year. With a lack of foreign currency, the country has faced severe shortages of fuel and medicine. On the ground, experts say the queues for petrol and the power cuts may not be as bad as they were during the peak of the crisis last year, but it's still a dire situation.
There's always this uncertainty whether supplies will be there. So any trigger, people get scared, and then queues form, and people panic. And of course, if you go to the market, the groceries, the drugstores, you realize certain items are not available or certain items are very expensive. So the crisis is still there, but it's in a different form. And people have, in a way, adjusted to this new reality.
To ease its economic woes, Sri Lanka is seeking a $2.9 billion bailout from the IMF. This has been agreed in principle. But it's likely that the IMF will only release the cash when Sri Lanka's biggest bilateral lenders agree to restructure the country's debt. Here in India, the government is reported to have given written assurance to the IMF of its commitment to debt relief, but China's support is still pending. The impact of the COVID-19 pandemic and the global economic spillover of Russia's war in Ukraine were factors that pushed Sri Lanka to the brink. The World Bank estimates that Sri Lanka's economy contracted by 9.2% in 2022, and it projects it will shrink by more than 4% this year. Amid their struggles, the public last year directed their anger at former President Gotabaya Rajapaksa, accusing the administration of financial mismanagement. He was ousted by mass protests and fled the country in July. The new government has increased income taxes and hiked electricity tariffs amid inflation that's above 50%. These are all part of efforts to secure the $2.9 billion from the IMF. And according to Sri Lanka's current president, Ranil Wickremesinghe, the country has now completed the list of 15 requisites set by the fund. However, such moves are causing financial pain for the masses and the poor and have triggered protests.
People are now depressed, and they are just day-to-day life. They are struggling to do their daily needs.
Due to this high increase of electricity tariffs, people are suffering a lot. The factories and the shops, they are gradually closing down.
But authorities say there's no other way out of the crisis. Economists say Sri Lanka needs to implement longer-term economic measures to get the economy on the right path, including branching out from tourism to grow other revenue streams such as exports. But first, Sri Lanka has to have the IMF bailout to raise the capital required to take such steps.
Nobody else is going to come in until the IMF comes, provides its own stamp of approval on the overall macroeconomic framework. And so basically what the IMF does is, before they lend, they have to ensure that the macroeconomic situation going forward is sustainable.
But some experts say unlocking the IMF loan still won't solve Sri Lanka's fundamental problems. Instead, they are prescribing much deeper reforms, including tackling governance issues.
Even when the agreement comes, doesn't mean all the problems are going to be solved. And Sri Lanka really has to go down a path of critical reforms. So those reforms, not just ensuring that there's debt restructuring, but reforms in terms of state-owned enterprises, in terms of ensuring Sri Lanka, the government has the money to address all the key concerns.
Ms. Fonseca warns that if economic uncertainty persists for too much longer, public anger could swell. And the danger is that it could boil over and trap the country further in its worst crisis since independence more than 70 years ago. Rebecca Bundhun, CNA, Mumbai.